Solana just triggered the perfect storm. A VanEck-branded ETF ticker quietly slipped onto DTCC's website. Trading desks are whispering about 95% approval odds, and my chart has a clean breakout mapping straight to the $600 plus zone. In the next few minutes, I'll show you how the ETF timeline, surging stablecoin inflows, and monster on-chain revenues all converge on one price path, and exactly where I'm trimming profits if the rocket really ignites. Strap in, keep your skeptics close, and let's decode why Solana's most explosive chapter might still be page 1. Look first at the 3-day chart on screen. After 4 months in a downtrend, Solana re-entered a short-term uptrend in April, but made a lower top than in January this year. This created a long-term downtrend line, which Solana has been trying to break since the middle of May. Momentum? The Heikinashi RSI just curled up from oversold, think spring-loaded. VRVP, or volume profile, shows the biggest volume bulge right where we're trading now, so a decisive weekly close above $155 kicks us out of traffic. Above us, the Fibonacci ladder is crystal clear. My 5 green circles? These are the targets where I'll be cutting 20% from the starting position for a total of 100%. A weekly candle close under $123, and I'm out for the trade. No loyalty to charts that break their word. Slide over to Marty Party's tweet showing VSOL listed on DTCC. Paperwork matters. Once Wall Street can settle SOL inside a compliant wrapper, fresh billions can flow from pension funds that still can't touch a self-custody wallet. Analysts peg approval odds at 95%. Final deadline October 10th. This date aligns with my third target on the chart when I assume Solana will be at all-time high region when they approve the ETF. Perhaps a possible correction after launch for a breather before the climb continues. If Ethereum's ETF injected $15 billion within 8 weeks, even a third of that into Solana ETF equals today's entire outstanding supply of staked tokens. Translation: demand shock without new issuance. Traders won't wait until the gavel drops. They'll front-run it, just like they did with Ethereum. Next, token terminal chart showing USDT supply at an all-time high over $156 billion. Notice the green slice labeled Solana. It just nudged past $1.8 billion, tripling since January. Liquidity begets liquidity. More stable coins on-chain mean tighter spreads, deeper order books, and higher throughput for everything from NFT mints to RWA trades. Each extra dollar parked here is dry powder that can morph into Solana at a moment's FOMO. It's like stacking kindling right under our Fibonacci extensions. Check the leaderboard. 5 out of the top 10 decentralized exchanges by 30-day revenue are based on Solana. Pump.fun, Axiom, Phantom, Radium, and Orca now log their highest 30-day revenue on Solana. All Solana native. That's not just users clicking farm and dump, it's sustained product-market fit, driving chain revenue. More fees mean validators and developers stick around, which in turn keeps the flywheel spinning. The tree map of top Solana applications shows Circle and Tether anchoring the stablecoin corner, while Jito owns liquid staking. Radium, Meteora, Drift, names we were memeing about 18 months ago, are now billion-dollar pillars. When total value-locked concentrations shift from mercenary yield to real utility, price often re-rates the parent asset to reflect that stickiness. Remember Binance Coin's re-rating in 2021? Say movie, new cast. Electric Capital's dev report screams one stat. 7,625 new developers touched Solana code in 2024. Talent is the scarcest commodity in crypto. If you hand the smartest builders a fast, cheap sandbox, they spin gold. Games, roll-ups, tokenized equities. Markets eventually price the runway those builders create. Flip to the chart of application revenue. Solana just booked $1 billion plus in app revenue for 2 straight quarters. That isn't theoretical inflation-adjusted nonsense. That's real fees, mostly from user activity, not validated inflation. Compare that with Layer 2's still subsidizing gas. Capital chases cash flow, and right now Solana prints it. The redstone graphic nails it. Solana clocks over $40 million in transaction volume per holder for real-world asset flows. Triple Ethereum. RWA tokenization is no longer a white paper promise. It's U.S. Treasuries invoice financing, even music royalties rotating onto chain. ETF approval plus RWA volume? That's TradFi meeting DeFi on the same block time. Phoenix Group's volume chart shows meme rotation still lives. $2.2 billion through Trump Coin, $1.8 billion via WIF. But note the sleeper. Layer trading $639 million. That's Solana's infrastructure token, soaking retail attention. When the memes cool, capital usually rolls into the base asset that powers everything. SOL. I treat meme spikes as sentiment indicators. Greed still abundant, runway not exhausted. Let's zoom back in on the 3-day chart and talk real-world execution. I'm treating this rally like climbing a ladder with 5 sturdy rungs. Each one a spot where I'll quietly skim a little off the top and lock in gains while the party's still going. The first trim sits at $220. That's my thanks for being right moment. Confirmation the breakout is legit. So I peel off roughly a fifth of the position and let the rest breathe. Next comes $250. This level lines up with the old range point of control, the spot where whales loved to accumulate last cycle. If price revisits it from above, I'll thank them again and bank another 20%. $295 is where euphoria usually bubbles over. It's the round number magnet, the one influencers tweet about when their cousin finally buys in. I trim a third slice there, happy to let the hype pay me. If momentum keeps roaring, $420, that golden 1618 Fibonacci extension, becomes my penultimate cash register. By now, 4/5 of the trade is safely off-chain, funding real life instead of my dopamine addiction. And should Solana reprise 2021's mania, I'm going to unload the final 20% into the stratosphere at $620. At that point, the chart is writing satire, not analysis. Happily wave goodbye to the moonbag. None of this means I marry the trade. A weekly close below $123 boots me out. No questions, no heroics. Hard stop orders, no mental gymnastics. Remember, profits pay rent and vacations. Stops protect sanity. That combo beats hopium every single cycle. We've stitched together ETF timelines, explosive stablecoin inflows, record chain revenues, and the cleanest breakout Solanas can print since 2021. Maybe Sol kisses $600, maybe it stalls at $300, but either way, the strategy is the strategy. Position early, scale out methodically, and never gamble rent money. And if you're still piecing together how to turn yields, airdrops, and staking rewards into lasting wealth without babysitting charts 24/7, that framework already lives inside my ebook. DeFi Financial Freedom, the ultimate beginner's guide. It condenses everything I've learned about compounding yield on platforms like Aave, Uniswap, Aerodrome, and more into plain English playbooks. It's only $5. Link is pinned in the top comment. Grab it and let the next bull run work for you. If today's deep dive helped, punch the like button, smash subscribe, drop your Solana price target in the comments, and catch my PEEF analysis linked on the end screen. Knowledge compounds faster than APR. See you on chain.